welcome to the Daily Stock Review. Today we're going to be going over Coles Group. The goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an investor on the journey, just 2,500 hours in over the last 7 years, and sharing the lessons along the way. What we're going to do today is jump straight into the stock analysis. This is my investing process, so I'll show you where I look for businesses to look for, and then today we're going to be doing a 5-minute check to assess whether Coles is worth looking at further. I'm learning off these guys over the last 7 years. They've done pretty well for themselves with a pretty good track record, so I want to follow in their footsteps. All right, so let's just jump straight into the analysis. All right, where did I come across this stock? I'm in Australia. I go to the shops, and Coles Group is one of the two main grocery stores. There are a couple other competitors in the market, which is including Aldi and a few other smaller ones. So that's pretty much where I've come across it. And there's always a lot of talk about these businesses being a duopoly, etc. And doing price gouging, other pricing tactics to get people to buy stuff in their stores. So let's go and have a look. My process is all about going back to basics. I can see they've got their PDF here. I've literally just typed in Coles annual report. We can see how quick and easy it is to actually look through and find a business without wasting our time or money. All right, so what I'm after is the financial statements. Because this is an Australian company, it doesn't need a more basic templated 10K form, which is in for US based companies. And as you can see, they just fluff up certain numbers that make them look better for potential investors. So I want financial report. Here we go, that's easy. And what we're going to do is I want to be looking for 3 things. I want to see if in the financial statements, that is, has this business mastered its customer? Do they have a moat around the business? So you can usually tell that by looking at the finances. And then is management rational with how they're spending the company's money? So that's what we're trying to do today. And it's pretty easy. So income statement is our first main statement we're going to have a look at. How much did they bring in? So we got over 2024 and 2025, 43 to 44, and that will be in millions. So that's 43 to 44 billion. Cost of those sales. So how much money did they have to actually, pay suppliers, etc. directly for it was 32 and 32. Gross profit was 11 billion, so slightly up, maybe $500 million there. Administration expenses, etc., financing costs, and profit for the period is 1 and 1 billion over those last 2 years. So what have we got? We got double that. That's sitting at about 2.5% compared to of net profit at the end of the day. But look, they do have a discontinued operations. So maybe a portion of the business that they've closed out, sold, shut down, etc. So there's a little adjustment there. So profit for the period ends with that. Don't worry about these terms. I'm not interested in those. Did they have? No, that was the first financial statement. And I want to scoot over here. The balance sheet. So I want to have a look around here and just see, is this business teetering? Is it financially stable? We want to look out for things like debt and things like that, how much cash on hand they've got. So cash and cash equivalents, 700 million. inventories is significant, as we'd expect. They have to buy all this stock and manage it. Property and plant, so total current minus total current liabilities. We don't usually like to see current always have, it's always nicer to see more current assets than current liabilities. But that's not the case here. It's not significant or over the top though. Trade and other payables, so it is a lot of stock. And let's have a look at the non-current liabilities. So interest-bearing liabilities, lease liabilities. So they don't have effectively a lot of debt. There's no big here sitting there saying anything about that. Let's have a look through the cash flow statement. Awesome. All right, so this one I want to make sure that does the business actually perform is management actually allocating the money where it should be? So is it being rational with how they're spending it? So we've got 2024 again, 2025. Payments to suppliers, 46 billion. Payments straight out, 42. You got some interest paid, etc. Component of lease. And we end up with these net cash flows from operating activities. So 2.7 or 2.8 and then 2.9. So this figure here, purchase of property, plant and equipment, is fairly stable as well. So what we kind of want to do here is take this figure, take that off it, and that gives us the free cash flow of the business. And so what do we end up with? Well, 1, 3, we end up with about 1.5 for pretty much. Yeah, and closer to 1 for the previous year. So there's not much there at the end of the day. Proceeds from borrowings, yeah. Payment of principal elements of lease payments, and then dividends paid. All right. So in terms of having a look at this and like how the business is set up, doesn't have a crazy amount in terms of the assets that the business owns. A lot of the business is based on products coming in, products going out, and managing those inventories. In terms of the amount of money that these guys have, like the net margins they have at the end of the day, doesn't really show that they have a strong moat around the products and their offering. Even though there's a lot of talk still these days about it being a duopoly, the pricing power that these guys have is diminished, I'm guessing, from what it used to be since other new entrants have come into the marketplace. So that's interesting. There's always big talk about how much their executives and things like that are making, but obviously this just shows the difference between a business where literally the entire population of a country goes in and has to purchase groceries, sees these businesses all the time and interacts with them, and the interest there is in talking about them, versus reality. Comparing this to other businesses, these guys don't make a lot and don't meet my criteria. So yeah, they may have mastered their customer. They're obviously everywhere. They've got permeability of the market, but they don't have a moat anymore. It's very diminished because it doesn't show in the financials. And rational wise, yeah, they're not overspending or anything like that. Purchase plant, property, equipment, proceeds from sales, purchase of shares, payment. So that's pretty much it. Nothing too exciting in this one. Coles Group doesn't meet my criteria. It may yours. If you've got any other stocks that you'd like to, or like me to have a look at, or that you're interested in and just want to see how I'd go about reviewing it, feel free to drop it in the comments or ask me any other questions. If things didn't make sense or I skimmed over something, let me know and I'll try and address it there. I will be reviewing comments and questions in Q&A parts of the videos in future videos. And if there's anything else, otherwise subscribe so you don't miss out and you get the rest of these reviews as they come through. If there's anything else, have a great day and check out this next video. YouTube reckons you'll like it. Cheers.